Yeah, thank you. And yeah, my goal is to deliver as much value to you and your audience as I possibly can too. So whatever kind of questions that you have that you think might be good for them, yeah, fire away. I'm happy to talk about anything.
David Lincoln Productions.
Information contained in this video is for educational purposes only. Everybody's financial situation is different, so some strategies covered in this video may not be appropriate for you. Trading in leverage products is risky and should only make up a small part of an overall investment strategy. To become a better trader, you need to take personal responsibility for any trading losses. Views of people being interviewed are not necessarily endorsed by this channel. We try to present many opposing views and let you decide. David is not a licensed financial advisor and is not trying to sell you anything. So sit back, relax, and enjoy the show.
All right. Good morning, you beautiful people. Welcome back to the David Lincoln Show. I hope you're having a fantastic Thursday. And let's just jump right into this. Today we have our guest from Long Island, I believe, Michael Lamothe. And welcome, Michael.
How's it going?
Good, good. So I found you on StockTwits where you are a superstar. I see you've got that yellow check, which I'm so jealous of. And you were explaining to me, I think off the air, how that came to be. What's your association with StockTwits?
Yeah, so a couple of years ago, I want to say maybe about 4 years ago, at this point, I reached out to Howard directly, and Howard's a super accessible guy. Like I was really kind of blown away by how accessible he is, and I got an alert for the Stocktoberfest being in Coronado, which is right off of San Diego. So, like, if anybody, if you've ever been there, it's absolutely gorgeous. I highly recommend visiting not just San Diego but Coronado as well. Like the little and or peninsula. I'm not sure it's one or the other, but anyhow, I reached out to Howard, and he agreed to allow me to be a presenter at Stocktoberfest. So I flew out there. I gave a presentation about how I traded and how I was able to make it work part-time and what I look at and how I'm able to like kind of make things kind of efficient for me as a process and how everything kind of came about. And after giving that talk, that's where that little check mark came from, and I became one of the recommended people on StockTwits to follow. So kind of neat.
Yeah, cool. Was that like a couple years back for the...
Yeah, I think it was. I want to say it was in 2014. I would need to go and double check that, but yeah, 2014 or 2015.
Cool. Yeah, I checked out the one this summer, and it was really interesting. I saw some retail stock presentation there, but it's if you go on StockTwits, they kind of make these announcements on the top of the page. There's like a little blue bar where they'll say when the current Stocktoberfest or current function is. I think they're having one in New York coming up soon. But
yeah, I'll be there.
Oh, nice. But that's some great content always. So I recommend people to check that out. And I also hear you're very active in New York City in the community of traders. What sort of stuff do you do for people?
So I am one of the co-organizers of the New York City Investors Business Daily meetup group. We meet once a month, and it basically, are you familiar with Investors Business Daily? Is your audience and what that is?
It's a publication. Is that correct?
Yep, it's a publication. I kind of think of it as similar to like the Wall Street Journal, but just focusing on investing and focusing on stocks and focusing on William O'Neill's style of investing, which is can slim. William O'Neill was a legendary trader, and he founded Investors Business Daily. And so Investors Business Daily created all these meetups all around the country, so that way individuals that are learning the system can all meet with each other and try to learn from each other. And I found this meetup group probably about 6 years ago, or yeah, about 6 years ago. And I went there and I was really blown away by the level of presentations. It was kind of like similar to the level of presentation that you would get in a graduate level course, or getting at a graduate level. And so I just got hooked and I kept on going. And so after about a year of going to these meetups, I showed the organizers of these meetups, and one of the meetups, one of the organizers was managing his own hedge fund. Another one of the organizers was trading full time, and somebody else was trading for at least 20 or so years. And I showed them what I was doing and what I had learned from them and how I was implementing it. And they were kind of blown away with what I was doing as a part-timer. And they wanted to implement a bit of what I was doing because they saw like efficiencies that I found, like taking like what you would normally do as like a full-time routine and kind of like breaking it down to just like, okay, here's what I'm able to do in just a couple of hours and make this thing work. And so I thought, if I'm able to impress these people that are doing this professionally, then maybe I have something that's worthy of sharing on a much grander scale. And that's where the idea for chartyourtrade.com came from.
Nice. So just briefly, what is CanSlim methodology? What does that refer to?
So CanSlim is an acronym, and it stands for what William O'Neill found to be the most common traits of stocks that have historically gone on to make 300, 500, 1,000% or more. And so looking back through history, he found these CanSlim traits. So the C stands for current earnings and sales of it. He found that they would have at least 25% or more quarter over quarter. And the way that it's looked at in the CanSlim world isn't Q1 versus Q2 versus Q3. It's Q1 of this year versus Q1 of last year. So you're filtering out that seasonality.
Okay.
Then the A is for the annualized earnings. And the annual forecasts. Then the N is for something that's new about the company. It could be something that's a new product, new management, just like something new that's happening with this. Then the L is for the supply and demand of the stock, so looking at the charts. The L is for leadership. The I, so leadership with not just in the market, but also among its industry. The I is for institutional sponsorship. So you want to see big funds buying this stock because that's ultimately what's going to drive the price up. And not just any fund, but Bill would look at which funds were consistently outperforming the market. So like the Fidelity Contra Fund, that's one of them. That's a big one that would be routinely outperforming. So if they were buying it, that was something that flagged a little, put it on his radar as like, okay, like that's something to be aware of. And then the M is for market conditions, because 3 out of 4 stocks are going to follow the overall trajectory of the market. And so what he found was that when stocks meet that criteria, they have a much better chance of making some kind of a big run. Doesn't mean that they will, but by focusing on the top 1% of stocks in the market that fit this criteria, then it helps weed out so much other noise and put us in a position to focus on the best of the best.
Nice. So how does it work in practice, trading based on this? Do you select certain stocks that fit a certain criteria and then get long them, or how does that work?
Works in a few different ways, and so this is kind of like how my journey began and how it later evolved into what it is now. So you read the book. Actually, let me go grab the book real quick.
Okay.
So, this is the book right here, How to Make Money in Stocks by William O'Neill. And so what he goes through there was how part of what it's telling us is his style of trading it. And Bill was a home run hitter. He's somebody that would get in as it was breaking out of a base, and he would hold through some pretty nasty stuff and hold for those giant moves. But there's a lot of ways to trade cancel him. I've been to some of the Investors Business Daily. They have a whole bunch of different levels of seminars. I've been through most of them, and it's taught by Bill's portfolio managers, and he has two of them in particular that teach most of them, Mike Webster and Charles Harris. And Mike goes for the home runs similar to how Bill does, and Charles is more of a swing trader, and both of them have outstanding crazy returns. And it's more figuring out how to make the system work, but make it work for you. And so to go back to how I've incorporated this, I'm somebody that likes to do a lot of different things. That's what I've learned about myself over the years. So I'm somebody that likes to have like all these different criterias of different signals. So like I'll see signals on daily charts, I'll see signals on weekly charts and monthly charts. And at first, and this is where I got tripped up initially, I was trying to do everything just in one account, right? And so I would buy the stock breaking out of the base, and then I would see it start to consolidate. And I'm like, okay, so it's ticking off this signal, that signal, that signal. Okay, fine. But on the weekly chart, on this more intermediate term time frame, it's still okay. So what do? I would try to hold at first, and then it would inevitably pull back and then fall harder. And then I'd be like, oh man, I should have gotten out earlier. And I'd have this back and forth struggle with myself. And I would have my equity curve was like this, a boom and bust. And it was very frustrating for a very long time. What I finally learned was that if I take and put it separate account for swing trading, separate account for intermediate term trades, separate account for long-term retirement, then I could focus on one set of rules for each, and that helped me dramatically. So that's what I've learned to do now. And so I'm trading that similar style, but I'm following swing trading rules based on what I'm learning here. So methodology versus tactics, right? So the methodology from here, tactics of swing trading, tactics for intermediate term, tactics for long-term investing.
That's interesting. Yeah, I have sort of a similar thing in that, like, I have my 401k account that is separate from my other stuff, which is sort of like longer term stuff. And I'm sort of glad you brought this up, because I've been making sure to say this in every interview I've done lately, to actually talk to the person about their long-term investments, because a lot of the people that subscribe or watch me are VIX traders, and a lot of the trades we do are relatively short-term, first of all, and second of all, are relatively risky. So what we found on that February 5th, Volpocalypse or whatever, was that a lot of people were all in on the short vol trade and got blown up. And I kind of looked back and sort of felt guilty that I hadn't emphasized more that most of us who've been doing this for a while, we have a separate stash of money that's more conservative, that's put somewhere else, that's for long term, that's safekeeping, and we don't put all our eggs in the short term trading basket. And I felt like some people hadn't got that message because they had put all in on one trade idea, as opposed to having some long-term savings somewhere in a place that they feel secure with, is not going to go anywhere. So I'm really glad you brought that up, to keep it separate.
Unfortunately,
like that.
the lesson that many of us learned the hard way. And it's the lesson that I learned the hard way too for my 403b, which is kind of similar to a 401k, but because I work in healthcare and it's a not-for-profit during the day, we're given a 403b. And so the way that I was trying to manage that when I was first learned CanSlim and some of the ways to analyze the overall health of the market, one of the things that we like to look for in this methodology is what's called distribution days. And the way that Bill describes a distribution day is that it's any down day of minus 0.2% or greater on heavier volume than the prior day. And I'd like to share my screen with you because I set up an algorithm in this trading platform called TradingView that helps flag this stuff automatically, which is really fantastic.
Oh, cool.
So,
yeah, sure.
Here,
Let's do it.
share screen. And do you see it?
I do, yeah.
All right, great. So let me just blow this up a little bit, get this out of here. And so you see all those little downward triangles up there? Those are all the distribution days.
Okay.
All right, so it's flagging all these as distribution days. And what we have down here, it's tracking the distribution day count over the past 25 days. In the CanSlim world, if distribution day becomes older than 25 days, then it's no longer relevant to the count. And there's other ways that CanSlim looks at the distribution day count. Like if a stock rallies 6% above a distribution day, then it falls off the distribution day count as well. This algorithm doesn't take that into account. I haven't figured out how to program that yet. But just having a count of the distribution days over the past 25 trading days, I found to be pretty helpful regardless.
Can you just explain conceptually once again what a distribution day is?
Sure. So let's zoom in on one, right? So we have this distribution day here, and what makes this a distribution day is that it's a down day of 0.2% or greater, and it's on greater volume than the prior trading day.
Okay.
The reason why Bill found that to be significant is because he sees that as pointing towards institutional selling. So when there's institutional selling in the indexes, we want to take note of that because it could lead to something like this.
Okay, I get it now. So it's a down day that is sort of confirmed by volume and like a relatively significant move.
Right, exactly. And there's a number of other things that we'll look at for to help determine the health of the market. That's just one signal among many. But yeah, that's what distribution days are in a nutshell, and what they look like.
Okay.
So I actually would like to share with you a little bit about the presentation that I gave yesterday at the New York City Investors Business Daily Meetup, because it kind of applies to what we're talking about here with distribution and with short-term versus longer-term. So
yeah, that would be awesome. Was there a lot of people there last night? Is it like a big convention, or how does it work?
40 people.
Oh, wow. Nice.
Yeah, 40 people, give or take. And yeah, halfway decent turnout. That's about average for us. A lot of new people yesterday, which was fantastic. That's always a great thing. But so what I was talking about were the different time frames, and so let's pull up 3 charts all at the same time over here. And so this was a monthly chart, and so you could they're kind of smushed right now, but we'll go into each of these charts. But on a daily, weekly, and monthly, you could kind of see like how like over here, like the move looks disgusting, right? Like that downtrend. It doesn't look much better on the weekly chart. On the monthly chart, we blow this up, and I actually want to adjust some of these settings over here too, so we could get a 12-month moving average and see what that looks like. And
yeah, I noticed you're using TradeView. That's very popular these days, TradeView.
oh
As a
yeah, yeah.
platform.
TradingView is my charting service of choice. It's just so easy to do different things with the charts and to look things up, to share things socially.
Nice.
It's a great tool. I love them a lot. But so zooming out on this monthly chart now, you could see that like it it it's been in this long uptrend, okay, but like it just ran down straight to the 12-month moving average and then rallied hard off of it, closing it in the upper half of the range for the month on volume that was greater monthly volume than we've seen since really February of 2016. So in my retirement account, I didn't really blink an eye at this move, and the reason why, and this is where I used to get chopped up too, to go back to that point. So when I first discovered Can Slim and these distribution days, and like, oh well, when you get a X number of distribution days, then that's signaling a correction. I thought that I was going to be real smart and go into my my 403b and start exiting when the market fell into correction. And I thought that I would get back in on a follow-through day and I would end up having much greater returns than what everybody else was doing. Mm-hmm. What happened was, instead of having these fantastic returns, I ended up being flat on the year when the market, well, was up like 10% or so in the early days when I was figuring this stuff out, like back in 2011 or 2012. And so what I started to realize too is that you need to trade on the time frame that things are meant to be traded on. Mm-hmm. And so for a longer term retirement account, it should be meant to be traded on a longer term basis. And that means that if you're holding through this stuff, you are going to have to sit through some nasty stuff. The way that I am looking to trade my retirement account right now is I'm testing a strategy of exiting below the 12-month moving average on a closing basis and entering on a close above the 12-month moving average on a closing basis. Okay. And looking at that, it's all this black line here, which is, I put it in as a 60-month moving average or a 5-year moving average. And what kind of struck me is that you don't spend more than about, let's see, so 2001 to 2005. So about 4 years below that 5-year moving average. Over here, you get below it in 2008, and you're kind of back above it in 2010, back below it, and like you're chopping around. But other than that, look at how long it holds that move, right? Like it was above it back here in 1978, and then all the way through to 2001, it's holding that 5-year moving average, which is pretty astounding.
Yeah, and the other thing I noticed, of course, is that we're nowhere near close to that right now in the sell-off of the last few weeks.
Right. So when it comes to retirement, I think that it has a lot more to do with when we're going to look to take profits and exit. Like how close are we to retirement? And to not try to over optimize. I think that a lot of times many of us are geared towards trying to over optimize, or like try to get out as close to the top as possible, try to get in as close to the low as possible. And it's not about that. It's about capturing the bulk of the move, especially for these longer term trends. And if we try to over optimize, that's how you end up getting chopped up. At least that's been my experience. I got chopped up trying to do that. Maybe there's other people out there that would be much better at it than I am, but I've had much better experience, have been more profitable, and have far less headaches letting my retirement account just do its thing and yeah, check in once a month.
Yeah, I think you're totally right on that. I mean, it's like, how do you reconcile, people will say, well, 80% of people that try to trade the market lose money, and yet the market's been up an average of like 10% over the last 20 years. How do you reconcile those two things? Well, it's because people chop themselves up. They get scared and sell out, and then they buy it chasing returns, and they end up sort of negative scalping themselves and losing the return that they would have just had if they just stayed in the market the whole time. And I think for you to give to that group last night is a great message to them, which is essentially stay the course based on what you're seeing graphically really right now.
For retirement, for those super long term, then yeah, that's what I'm doing. Like I'm not. I'm very careful to also tell people that one of the most important things that I believe in trading is to have self-awareness. And I can tell people what works for me and my story, but well, what works for me is not going to necessarily work for you or work for Bob down the street. It's a matter of, and I also believe in modeling success as well, right? So like those are two kind of competing ideas, but we could learn so much from different books, from different people that have had so much success. But eventually, if we want to get to that next level, we need to burn our own path. And that's when self-reflection comes into play and learning who we are and how we operate. And that's how I learned that, hey, if I just put my accounts into all these different buckets and have specific rules for those buckets, I would do a lot better. And that's what's happened.
Now, were you always interested in the markets, like as a kid, or is this something you came into like later in life? I think it's interesting how you have a second job, because that applies to many, many of us. So I know that many people can relate to that. But was this something that you thought about as a kid, the markets and Wall Street?
A couple of things with that. So first, I want to point out too that I still work full time, and like I've been working full time. Like I was just a guy that had a passion for the market, and at this point, I am actively working towards this being a full time thing. Like not just trading, but educating and everything that I'm creating with Chart Your Trade. But to go back in history, when someone first planted the seed, it was actually my Uncle Francis that planted that first seed. And I remember distinctly, we were in my backyard in Astoria, Queens, New York, and he was telling me how he would read the Wall Street Journal, and he would pick out different stocks, and he would read about them and learn about things that would interest him. And he found this company that he thought was very interesting. That you have these electronic devices, and this is going way back to when I was probably about like 8 or 10 years old. And so what is that? That's about 1990 or maybe like late 80s, or 1990. So devices, and they could talk to each other without wires. Turned out to be Bluetooth. I found that out way later on, but that's something that planted the seed. And so I kind of remember like every once in a while, like tuning into a Jim Cramer radio show. Like back then he was on the radio. I forget which station, if it was like on 92.3 K-Rock or some other channel. But I remember listening to some of his shows on the program. So that's kind of like watering the plant. And then by the time I finally got to high school and graduated, and I started to work part-time while I was earning my bachelor's, I decided that I would save up a little bit and try this stock market thing. So I saved up my first $5,000, and I'm like, okay, like this seems like enough to try to do something. Let me go try to invest it. So I go to my local bank, and I walk into the bank, and I have no idea what I'm doing or how to do any of this stuff. But I saw a financial advisory thing, and so I asked them like if they do stocks and if I could start investing in the stock market in here. And so they said, well, yes, you can, but you don't really want to pick individual stocks. That's way too risky. What you want is this. And so they hand me a bunch of different prospectuses that later on I found out were a bunch of mutual funds. So I start reading all these different things, and the guy's telling me, well, what are you doing? Nobody reads those. And he's kind of sitting there laughing at me. And so I'm like, oh, okay. And I'm just like flip through it a little faster. I'm like, okay, well, I'll pick this one, this one, and this one. And it ends up being a couple of mutual funds and a bond fund. So I think that, okay, I'm being conservative. I'm being wise with my money. I'm diversified. I have probably about 200 or so stocks, maybe about 100 or so different bonds, and I'm having professionals manage this for me. It's going to be a big win. This is around 1998, 1999. And so I check in on my account in about 6 months, and it's up. It's up maybe about somewhere between 6 to 8% in about 6 months. And so I'm thinking, wow, this is really good. I'm a genius, right? So then my studies start to pick up, and I forget about the stocks, and I'm like, well, I don't really need to check in on anything. It's more of a longer term thing. I have professionals managing it, super diversified, and I forget about it until 2002 when I finally graduate. And I graduate, and I think that, man, that if that same rate of return. So yeah, so I was in college, and I forget about this money that I had, but I thought that it would probably have grown to maybe about 10,000 if it stayed at that same kind of rate of return, around 6% or so. And I go to the account after I graduate, thinking that I'm going to have this nice down payment for this car that I wanted, and I didn't have $10,000, didn't have 8, didn't have 7, didn't have the 5 that I started with. Had $4,000 in the account. Had 4,000. I had diversified. I had given my money to the professionals. All this time because and I also thought too that the stock market meant put money in, wait time, get more money later, and that's what investing is. Well, that's not what investing is, and I learned that the very hard way. And so I took that money out of my account. I went home and I cried, and I did not look at markets again for a long time. And so that was my first taste of the market, but the bug was still there. If we fast forward a bit to kind of like how I started to get back into trading again, I think that it really started when I started my current job that I'm in now. And my title is actually, funny enough, fund manager, even though it has absolutely nothing to do with the stock market. Like my day job, I'm managing research funds, grants, and
Gotcha.
philanthropy. But one of my coworkers, who also happened to be a broker for many years and ended up leaving that industry and coming into healthcare, was telling me that, you really should look at the stock market again and get involved, because now you're in a job where you're making a decent salary and you're probably saving a bunch now. You could really make that grow. So he recommended a bunch of books. Bill O'Neill's was one of them, and I read through that, and I absorbed it like a sponge. It really spoke to me, because it just seemed so logical that, yeah, like the types of stocks that would make these gigantic moves should have common things among them. And all the like, if a stock has, and a company continues to make these great earnings quarter over quarter and accelerating quarter over quarter, then naturally it seems as though the stock price should go up. So I really got into that. But even learning and trying to model people that have had great success took me probably about 3 to 4 years or so of getting kicked in the face to finally start to have a little bit of momentum and a little bit of consistency. And and yeah, the learning from others only gets us so far. There's so much internal work, so much mental side of the trading that we need to learn. And the only way that we're really going to learn that is by studying ourselves. And so there's a lot of different ways that we can learn to study ourselves. And yeah, do you want to go into that?
Yeah, I think it's that it's such an important point that that you actually do have a full-time job, because it just kind of reminds me of what William Buffett has said about developing wealth, which is to first of all develop your earnings potential and have some sort of engine that is fueling the money to start investing with and start growing with. And I found that to be the same case for me, having a job, a main job, because first of all, if you do mess things up, you have that money coming in to rebuild. And second of all, you need some sort of basis to start out with, and you need to grow your, having a full-time job helps you continue to grow that money, over time. Sometimes if things don't work out trading, at least you still have that money growing in the background. So I think it's a great thing that, but sometimes we get criticized, or at least I do as a content creator, saying, why do you have a second job? You must not be, successful enough for us to follow you, because you have to have a second job besides just being in the markets. And no, it's actually, it's a diversification thing. It's reality for most people. Most people can't just start and somehow magically be successful as a trader and not have another job. So I think that's...
I also think that that's kind of foolish too, right? Like, why wouldn't you want to have multiple streams of income?
Right.
Somebody was telling me the other day that I think that they were telling me that Buffett suggested having 7 streams of income. 7, right? So it's not just going to be money from your trades, like, and it's not just going to be dividend income either. Like, you could be investing in real estate. You could be investing in startups. Like, there's so many things that you could be investing in. If you have a full-time job, okay, fine. Or if you have a part-time job, okay, fine. Or you could also have businesses too. Like, there's so many different ways to have revenue. Like, it just makes sense to have multiple streams. And then it's far less stress on the trader that, like, okay, if this trade doesn't work, I'm not eating tonight. Or if these series of trades don't work, then my mortgage isn't being paid. It takes all that stress off. And so I have a friend who is a commodities broker. He trades copper, and that's the only thing that he does. And I have so much respect for this guy. It's incredible, because to have that be like your one source, and to be able to do this and do it consistently, that's where, to me, maybe it's because my background, my experience has been having multiple streams, so I don't have the mindset for just having one stream and having that one stream look like this. But yeah, I think that having multiple streams of income takes the stress off of any one individual stream, and that goes for employees too. Well, what happens if you get laid off? What happens if your company goes under, or any other number of things that forces you to leave that job? Then what do you do? You're forced to look for some other employment, or you have all these other income streams coming in, and that job, it's like having what I think Howard Stern once said, "F you money." I think that's what that enables us to do. And so, yeah, I think that having multiple streams of income is a great idea for anyone.
Yeah, I wanted to ask you, because we were talking a little bit about this before, sort of offline. Who are some of your who are some of your like inspirations in the world? Like, as far as like, who do you look up to as far as like an example of somebody you'd like to be like, as far as like if your website was taken to like the fullest extent it could be, and who do you look to for inspiration?
So more as a business or as a trader? Because they're kind of related, but there's different people in each of them.
I would say more as a business, because I'm curious to kind of tap into some of your experience in to help me develop myself in the business that I'm trying to develop here.
Yeah, absolutely. So, first one, which is huge for me because he's exposed me to so many other great entrepreneurs and great minds, is Evan Carmichael, and he has a fantastic YouTube channel. And you could find it. Just go into YouTube and search for Evan Carmichael, and this guy has profiled every person that's been successful, or not. Probably not every person, but so many people that have been successful from so many different walks of life, whether they are a successful business owner, whether they are a successful actor or actress or sports person, and you listen to all these success stories, and eventually what I learned was that the traits of being successful have a lot of commonalities no matter what walk of life you are in. And he also actually wrote a book too. Let me go pull this book out.
Okay.
It's this book here, The Top 10 Rules of Success. And so what he's done in this book, 40 or so different people, and has taken their what he's identified as their top 10 rules of success and put them in the book. And what he suggests is not just like read the book cover to cover and go through it in a day or two, but to read one page per day. And each page has 2 rules from each of these super successful people. So Steve Jobs, Tony Robbins, Oprah Winfrey, Simon Sinek, who's fantastic. I met him the other day. And yeah, just so many great minds in that book. Eric Thomas is another one that's fantastic. And you get 2 of these rules every single day, and you read it in the beginning of the day, and you can reflect on it and try to apply that to what you're doing and how you do it, and try to carry that throughout the day. And the more that we're able to surround ourselves with these great minds, the more it kind of seeps into us. And I've done this probably over the past maybe about 8 months to a year. And my mind has gone from a completely different spot to where I am now. And I feel as though like I'm really firing on all cylinders, and I'm building teams, and like just mentally, emotionally, like everything, like it's a much better place, and things are moving a lot quicker for me and other and Chart Your Trade and other aspects of my life as well. Just much happier, and the things are good. Having much bigger impact too. I feel.
Now, how does Gary Vaynerchuk make money? Does he sell classes, or is it views on YouTube, or because I watch?
He's not monetizing his audience in that way. Like, he's giving all that stuff out for free. Like, the way that he makes his money is he has his own company, VaynerMedia, which is a social media advertising agency.
Oh, okay.
So he's helping big businesses, Fortune 500 businesses, take advantage of social media, and running those kinds of campaigns for them. And yeah, like he's written books. Like I don't think that he's becoming a millionaire off of like selling books, even though they go to be bestsellers. Like, that's not how he's making his real money. But like, he does that. He does speaking gigs. He said on his channel too that like he could make a full-time living just being Gary V and pulling in $15 million a year in speaking fees. But he would much rather be a practitioner and be an entrepreneur of like managing and building businesses. And so that's what he does. And
he's somebody that, it reminds me of you a lot, in that he just really enjoys teaching people and helping people out. And I think that's a quality that you sort of have to be successful in what you're doing. And I can definitely tell from your videos and everything you do that you have that same quality too, that it's not, in the end, the focus is on helping people out, and the money and stuff will come after that in a way, but that's not really, it doesn't seem like that's what you're in it for, is the money, as much as just it seems like you get a lot of reward out of helping people out.
I think that money is a result of doing the right thing and helping people, and just like Gary too. Like Gary says that for him, it's more about legacy. And one of the things that he likes to say too, it's how many people are going to show up at his funeral, right? Like, oh, well, what kind of an impact is he going to have? And I feel as though like that's so much more important than just the monetary aspect of it. Like, if I'm able to generate an income that's able to pay for my house and that I'm able to live off of, and still like comfortably, like I don't need to buy jets. I don't need to have Rolexes or any kind of fancy stuff. I just want to be able to do what I want to do, and that's to be able to help people, because I really believe that the stock market is one of the best opportunities that everyone on the planet has access to, and most people don't take advantage of it. And they don't take advantage of it because they think that it's too hard, it's too complicated, I can't do this. And that's not true. Like, it is challenging. Yes, it is. And it takes dedication. But I believe that anybody that's willing to put in the work can learn to do this. And I also think that even if the stock market isn't for you, you should have basic understanding of it and how it works. So that way, once you are able to save some money and have somebody else do this stuff for you, that you're not just handing it to anybody, because nobody's going to care more about your money than you.
Yeah, I have a friend who's a recent immigrant to the United States, and he's been very successful at starting small businesses. For example, he has a business where he rents mopeds. He owns a bunch of real estate, and he got involved with crypto recently and Bitcoin and that sort of thing. But I've had a real... Recently? I'm sorry?
Well, what's recently?
Well...
Before 1700 or after 1700?
He was able to capture like the rise up in crypto a little bit. I think he bought Bitcoin for like $2,000 and was able to ride it up in December. But
that's great. Did he? Well, what's he doing with it now?
I mean, it wasn't a huge amount of money in the grand scheme of things for him, but I just found it amazing that he had more trust in cryptocurrencies than in the U.S. stock market. And it just speaks to the fact that the U.S. stock market can have a really bad rap, especially in like millennials' eyes these days. People are, I think maybe it's because of the financial crisis of 2008, but people are very distrusting of the stock market. They think it's a scam, and it's really up to people like you and I to kind of reverse that in younger people's eyes, I think.
Well, is it a trust thing, or that, to me, like if it trades and it has a chart, like you could treat it, the chart, a chart is a chart to me. And so whether you're trading crypto or you're trading stocks or ETFs or Forex, whatever it is, if it has a chart, like you could still find the same patterns and the same kind of supply and demand rules apply. So is he doing it? Do you know that he bought it because he had a distrust of stocks?
Yeah, I think it was more of like a philosophical thing for him. Like he bought into the idea of crypto and the idea of like something that's independent of governments and this and that. I mean, and he was on board for a while in the run up of Bitcoin, like so many people were, and it kept going up and up and up, and he really got into it and got on board over time. And the whole time I was cautioning, and I'll admit I was wrong. I should have gotten on board when he did. He was trying to convince me all last summer to get on board Bitcoin. I never did. But I was always cautioning him the whole way up. And when it was 19,000, I was trying to get him to sell half and whatnot. But yeah, I think it was just a distrust of Wall Street that he wasn't really a chart guy in any way, but he just really distrusted the stock market because he'd heard of, the downturns are publicized and the upturns aren't as much publicized, I guess, is what it is.
Yeah. Well, what's Bitcoin trading at now? Like in the neighborhood of like 7 to 8,000.
Yeah. I mean, he bugged me every day about buying Bitcoin, and now I bug him every day and say, okay, what's it done for you lately? Because, we sort of jokingly tease each other, but I try to explain to him, well, the stock market's still going, whereas Bitcoin is stagnant at best right now, it seems.
To me, like these chart patterns work. And a friend of mine, actually, my web designer, bought some Litecoin right before it had its parabolic move, which was great for him. He got in at around 150, and
And then
I
it
forget
doubled,
exactly where
Yeah.
it topped, but like I think in the neighborhood of 400. Like he started to tell me about it, and
Yeah.
I was telling him like that's great. What's your plan? And so that he's like, I think that this is something that's going to go long term, and I want to hold on to this long term. And I said, okay, then how about this for starting to manage your risk? Like you've already tripled the amount that you've put in, right? So 150 to about 400. Why don't you sell? Why don't you just pull out the amount that you put in and let the rest of it ride? So that way it could go to zero and you haven't lost anything. Like you just lost the profit, but your money is out. And
Exactly.
So
Exactly. Yeah.
and that's what he did. And so we had that conversation. I actually put out a YouTube video about crypto and specifically Litecoin. And a day later is when that move happened. Pretty it coincidentally, maybe not like, because again, to me, this like technical analysis works not where it's predicting, but you could see like how trends are forming and where support areas are, and where if things are broken, where it's a major turn or more of a minor turn.
I actually had 2 subscribers give me Litecoin. They each gave me 1 Litecoin it was basically for a Christmas present. And
That's a great Christmas present.
yeah, and I turned around, and it right after they gave it to me was that same period where it went to like 300, and I have a distrust of crypto, so I immediately just sold it, and I said, wow, this is great. Not only did they give me a great present, but it actually went up in value. But I think that you gave some great risk management advice. It's like people, you gotta like do some context. My buddy that bought it, I had some buddies that bought Bitcoin at 3,000. Yeah, if it gets to 10,000, take your money off the table. Play with the house's money if you want. But at least I was begging these guys, and a lot of them didn't do it. A lot of them just held on to it and have kind of wrote it back down again. But they still tell me, well, I bought it for 1,500 and now it's 7,000, so I'm still winning. But still, time's going by and you're not making new money. So
it's so important to have a plan and to make the plan before you enter the trade. And that doesn't mean that you make the plan once and then that's it. Well, like you make the plan, you get into the trade, and then we continuously update that plan as well. Like if we're, for example, like managing our stop losses or that sort of thing, like if we have a gain and the stock is moving up or the cryptocurrency is moving up, okay, where are we going to get out if it starts to roll back, or whatever time frame that we're trading on? Like, well, what's the idea? How are we going to manage the trade? How does the trade feel? How does the other side of the trade feel? Right? Like, I feel as though that's something that's very important. There's a buyer and seller on either side. Put yourself in the shoes of the other person. Why are they selling it? I think that's something that's super interesting that not a lot of people do.
Yeah, that is definitely a great idea, and I do that myself. I think to myself, wow, what if I was whatever the opposite of what I'm doing right now? What if I was, and usually I'm usually short VIX, so I always say to myself, what if I was long VIX right now? Would I feel comfortable with that position? And if I would, then maybe that means that my position is wrong, or maybe I should lighten up a little bit. But yeah, the ability to see things from someone else's viewpoint. So I wanted to ask you, being that you have another job, what is your interaction with the market every day? Do you check the major indices every day? Do you follow gold? What sort of things do you follow day to day?
So I'm following the stocks that I have in my portfolio, and I'm following the stocks that I have on my watch list. And I'll also check the major indexes. And I will typically do that towards the end of the trading day, so around 3:30 Eastern time. And yeah, if I have the ability to check in a little bit more frequently, I do occasionally, mainly because of my business, not as much for my own personal trading. Like if I was only interested in just what I would use, I wouldn't have the need to be checking it more than just the end of the day. But I'll check in at the end of the day. But my processes allow me to not even have to check in at the end of the day. One of my trading heroes, to kind of go back to mentors, uh, is Nicholas Darvis. Are you familiar with him?
I've heard the name before, but enlighten me.
Nicholas Darvis wrote a book called "How I Made $2 Million in the Stock Market," and I forget the period that he traded, but it was a long time ago, and he was a dancer, and he's somebody that traded part time on weekends, and this is before the dawn of computers and before being able to have charting services like do it, and would have a telegraph send him what markets were doing, and would pick out different stocks and have his broker send him, well, what was the open and the close, and tell me what the prices were, and have that sent to him after the market's closed. He didn't want to be bothered at all during the trading day. And he's somebody that went on to have this incredible success by only knowing what the market was doing after it was closed and asleep, and doing his work and making his plans while the market was sleeping. And so that gave me the confidence that, like, okay, he's able to do it, that I can replicate that for myself.
Well, it gives you perspective, I believe. Yeah. Like a little bit of a distance from the noise, sort of, it seems.
Absolutely. Absolutely. And yeah, I think that there's so much noise out there in traditional media, in social media, in everything. I think that there's really two types of stories. There's the stories that are being told in the newspapers and online, and then there's the stories that the charts are telling us. And those stories that the charts are telling us are everybody's actual buying and selling. And so that's why it's not a crystal ball to me. It's just, what are people actually doing? And it's shown to us right there on the chart.
Yeah, I mean, you are distinct from a lot of the people I've interviewed in that you are sort of a portfolio manager more than a day trader or a swing trader. A lot of the people I talk to are day trader or swing traders, and being a portfolio sort of manager, which is sort of similar to the way I trade, which is put a position on that lasts over a term of time and slowly adjust it. These are more ways of building long-term wealth as opposed to just what have you done lately as far as a day trade or something like that. So that's very interesting to me.
Mm-hmm.
What would you suggest to somebody who's new? Let's say somebody just graduated from college, just got their first job, and finally has a couple extra bucks. How would you suggest they engage with the stock market initially?
First, I think that it's important for them to begin educating themselves and learning about themselves, and what style speaks to them. There's so many different styles out there. There's no one right or wrong style or methodology, but there is going to be probably a couple that are going to be right for you. And so I think that that's an important place to start first. So read a lot, read as much as you can. And there's the books that I've already mentioned. Those are very, those spoke to me. I think that they're good. I would recommend that people read those, but read other things too and see what speaks to you as well. Some of my other favorites so Bill's book is great for methodology. I think that Van Tharp's book, Super Trader, is great for the mindset of trading, building a business for trading, position sizing, risk management, all those things that are even more important than the actual methodology that you end up picking. It, like most people, I think the entry point and the exit point is the most crucial thing. No, that's actually not the most crucial thing. Most crucial thing is really your mindset, because the weakest part of any trading system is going to be you and me. And I've proven that many times over my trading journey so far. I think that after mindset, risk management and position sizing are absolutely crucial, because you could have a gigantic winner, but if it's this much of your portfolio, then it's not going to mean much. And if you're somebody that has a 90% win rate, and that sounds fantastic, but you have that one trade that blows up your account, well, that's not good either. It's position sizing and risk management. That's what's going to really make the difference. And I think that compounding returns over time is what allows us to ultimately win that longer term gain too. And if you do have those giant losses, then it's going to be so much harder to compound your returns. There's charts of like compounding returns and all that all over the place. But I think if you have a 10% drawdown, it takes 11% to get back to even. If you end up having a 50% drawdown, it takes 100% to get back to even. There's so many times where people think that they're right and the market's wrong. So they dollar cost average and they keep on buying more as the stock is going down. And when you're doing that with an index like the S&P 500, okay, like over that super long term, and if you're doing that for your retirement account, yeah, okay, that I can see that making sense. If you're doing that for a stock might never come back. A cryptocurrency might never come back. We don't know yet. So if you just keep on buying as it's going down, it could take years. It could rebound, but it could take years to come back, or it might never come back. So I think that risk management is super important, as is position sizing. And Van Tharp's Super Trader is a book that does a great job of explaining all that too. Then I think that surrounding yourself with people of the right mindset, or a similar mindset to what you're aspiring to, is super important. So go out on social media, look at Twitter, look at StockTwits, look at YouTube, all these platforms, and see who speaks to you as well. And there's a lot of noise out there, and it's super hard to filter out the noise. And so I think that after you've read a lot and have a little bit of a base, it'll be a little bit easier to sort through what's just noise and puffery and people trying to sell you something versus people that are actually giving you solid advice and are there to help. At least that's kind of been my journey of knowing or having a better sense of who's for real and who do I want to ignore.
Well, you've got this huge following on StockTwits, and then I look at your YouTube, and there aren't that many people following it. And so I kind of want to shout from the rooftops for people to check out your content, because it's completely awesome. And I think people just don't know where it is, because if they looked at it just for a second, they would be hooked on it. So please check out Michael's content on YouTube. It's awesome, and you deserve to have about 100 times more followers, and I'm sure you will in short order. But you know, one of the things I like to do when interviewing people is to highlight people that have extraordinary content, and you certainly do. And so I want to see more people checking out your stuff because it's awesome. And obviously, I can't go into all the awesome points you make and the people you profile and the lessons that you teach on your YouTube in just you know, just a short interview, but please go and check out his stuff because there's a ton of useful information there. And it's just under your name, the YouTube channel, correct?
It's youtube.com/chartyourtrade.
Oh, that's right. Chart Your Trade. Yeah. So go check out Chart Your Trade because he's got stuff there every day that's really awesome. And if I lived in New York, I would definitely go check out one of those Investors Business Daily forums that you teach at. What other ways can we follow you? Talk about Chart Your Trade. What sort of services does Chart Your Trade offer to people?
Yeah, sure. Let me share my screen. I'll bring up Chart Your Trade.
Yeah, I'm just worrying about time. Are you okay right now? We're at 2:15.
I'm probably gonna need to drop off in a moment.
Okay.
Have time to show you guys what Chart Your Trade is and
Great.
what it looks like and what it's about.
Great.
So this is the homepage of chartyourtrade.com. We have a lot of different blog posts. I'm very fortunate too now to be working with two other very talented bloggers. The first one is Beth Marconi. She wrote this one here, How to Be a Trading Environmentalist. And it's more about, this particular blog post is talking more about setting up your trading environment, not just you know, your immediate home environment, but also mindset and who your health and who you're hanging around with, because those kinds of things are so critical to how we end up performing well. Like there's things out there that say that we are the sum of the 5 people that we hang around most with, and I find that to be true. And I find that one of the ways that I'm able to hang around people that are much better than I am is by doing it virtually through the internet and watching different YouTube channels and by reading all these different books. And so some of the ways that people could find me on Chart Your Trade too are, there's these links up at the top here. I'm on Facebook, I'm on Twitter, Instagram, and the YouTube channel. So all those are right here on Chart Your Trade. And because you asked about our services, I'll tell you a little bit about each of them. The first one is this MRI stock scanner. So back when I went to Stocktoberfest all those years ago, I met someone by the name of Liav Graves, and he runs optionsamurai.com. And we got to talking, and I was telling him about my process and what I was doing as a part-timer, and I would run all these different screens, and I would overlay an ideal growth stock screen. And this whole process would take me maybe about 2-3 hours on a weekend of scanning and then filtering and manually doing all this stuff, picking out different stocks. And he's like, you know what? I could automate all that stuff for you. And I said that sounded great. And so we built this tool, Chart Your Trade MRI, and I'll actually show it to you real quick too while we're talking.
Okay.
But well, what Chart Your Trade MRI does is it runs multiple scans that are predefined, and it overlays, or it gives us the ability to overlay an ideal growth stock screen. So these are the different scans that it runs, and there's a blog post on Chart Your Trade that shows you all of the scans and all of the detail of what we're scanning for. So if somebody theoretically wanted to take all the scans that I'm running and plot them into a free service like a FinViz, they could, but it would take them about 2 hours or so to like go through. Well, they would need to build all the scans first, then go through all those scans, and then manually overlay this part here, this ideal growth stock screen, and get all these different stocks. So what I just ran were all these different scans that comprise of about 65 different criteria, and then overlaying this ideal growth stock screen. And that's basically like CanSlim qualities. And so all these stocks, about 71 stocks, happen to have that right now. What I've noticed, and I did the study in 2000 for the stocks passing in 2016. I'm currently working on this project for 2017. But in 2016, what I realized was that when stocks pass by 80% or more, they have a 50% probability of making a run of at least 50% or more from the time that they pass to the entire life of a stock. So meaning that they pass today, if any of these stocks have a 50-50 shot of making a significant run from today forward. Well, which I found to be really, really incredible.
Nice.
And that's what happened in 2016. I'm very interested to see what happens in when I do this study for 2017. If people sign up for this service too, like there's a part of the what I give them to show them how to get the most out of this particular product. It shows that whole case study, and it shows like how to run all those different scans. It shows the case study, and people could test this out for only $1.
Nice.
There's a coupon code $1 scan. So if they come over here and they put in the coupon code $1 scan, let me get rid of that product. That's another product I could show you in a second. But if they go to the cart and they put in coupon code $1 scan, then it's already purchased. It won't let me do it. So $1 scan, they'll get to try it out for only $1 and kick the tires, see if it's for them. And if they like it, stick with it.
Nice.
Some of our other products here, we have two other ones. There's an elite stock setups and an advanced stock reports. So I'll talk a little bit about the advanced stock reports, and I'll also go to this other special offer here. And I'll give you the link because, well, this one does, this special offer is giving them 3 months of this service for only $27. And
nice.
so what this service does, it's a lot more research. There's a full weekend report that goes out. It provides a model stock portfolio where we are giving the exact entry points, the exact exits, how much is being risked. And actually, let me show you one of these reports. And I'll go to a report from a little while back, so that way you get to see some of the entries and exits, because right now the model portfolio is treated as a real portfolio, and it's traded on the intermediate term time frame. And because we are in the middle of Chop Fest, we're not taking any new positions, but we are actively managing and holding positions that we've held for quite a while.
Gotcha.
So, for example, like we've held Adobe since January 2017. As of right now, it's up over 100%. So this report was from March 12th. So right now, I believe it's up about 100%. Holding Caterpillar for about 6 months, Intuitive Surgical. We ended up getting stopped out of Twitter for a small loss. These are how we continuously manage the account. So theoretically, somebody can go and follow along with the model portfolio, trade for trade for trade. And I've actually done this in a separate account. And that's how I ended up doubling the return of the S&P 500 in 2016, and how I tripled the return of the S&P 500 in 2017 just by following this trade for trade for trade. And I started a whole segment on YouTube called "The Path to 300" or tripling the S&P 500.
Nice.
And so I'll bring that up over here. And so I'm showing people every single trade that I took. Oh, well, that's a bad place to stop. Don't really look. Let's. Anyway, but if you zoom in over here, you see that I'm showing everybody how we took this trade for trade for trade, and the journey wasn't straight. There were periods where we had drawdowns, and there were periods where we didn't have a winning trade for 5 months. But by sticking with a process that we know works and continuing to let that process work, we were able to find an Adobe that we're still holding today, that we bought in January 2017. We were able to find Alibaba in January 2017 and ride that up for about 70 or 80%, and find all these other trades that more than paid for all these little losers of 4% and 6%. So we exited Alibaba. We were looking to get back into it. Both of these trades actually ended up getting executed, and they ended up generating small losses. But that's part of the course in trading.
Yeah.
And so I also feel that it's important for people to test a service like this that's meant to be intermediate term in nature, and to test it out for a full quarter, which is why we have that quarterly set up, where people could test it out for 3 months for only $27. So I'll give you this link so you could include it in your show notes. And
Yes.
yeah, that coupon code 3 for 27, and then they get it for only $27. And
Nice.
they're getting those weekend reports, they're getting intra-week updates, and they're getting direct access to Adam Sarhan, who puts the reports together. He also is a Forbes contributor. He's also all over the mainstream media, CNBC, Fox Business, all those. So you might have seen him on one of those. And you get direct access to him to ask him questions, not just about the service and the trades that we're putting on, but if you see your own trades and you have questions about them, or just general trading advice, and you have direct access to him, you have direct access to me, and our goal is your success in the stock market. So that's a huge part of the service, and we want people to take advantage of that. And that is what we do with Chart Your Trade. We just want people to be successful in the stock market, and we want to do everything that we possibly can to help them.
Well, congratulations, Michael, on your awesome returns over this volatile time. And I know that you've got other stuff going on today and got to get out of here, but I'm not done with you, so you'll have to come back sometime soon, because I have more stuff I want to ask you. So you think you can come back sometime soon?
Absolutely. It's been a real pleasure talking to you, and I hope that this was able to deliver value to your audience as well.
Okay, well, thanks so much. I really appreciate you sharing a little bit of your time, and good luck moving forward. And everybody, please check out at least check out the YouTube and hit subscribe. Just check out some of the videos, because it's definitely worth it. Go to the website, and it's definitely worth your while. Did you hear those returns that he's been getting? This is about you making money, folks. So thanks so much for being on, and I will see you out in the verse.
All right. Take care. Have a great day.
All right. Thanks again, bud.
Bye-bye.
So what do you think? Hold on one second.
Yeah, good. Rip it, put it up.
I'll fix that. All right. Thanks a lot. Thanks a lot for that. I think it went off okay. And
Yeah, I think it's good.
nice.